What happens to rental rates when a real estate crash happens? Stay tuned to this episode of Prime Properties TV. I promise you, it will definitely be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you could join us here. As a seasonal real estate investor or an investor to be, I'm sure you've come across your fair share of real estate millionaire weekend bootcamp classes. I know I have. A handful of US-based classes are the first hits that you get on Google searches when you want to learn more about real estate. They promise you how to be a multi-millionaire real estate investor over the weekend by using OPM, other people's money, to buy properties with 0% down. Well, let me save you $10,000 class fee and say that it's a complete waste of time, money, and focus. It's a very steep fee for not enough return on investment. I would highly suggest you pass on it. Here's the simple secret, let me tell you. The single most important piece of information that I will never tell you in these real estate bootcamp class, the secret is to buy a property that pays for itself, i.e. where the rental income covers all your expenses. That, ladies and gentlemen, really is just the bread and butter of real estate investing. Simple, right? There are multitudes of methods and strategies for real estate investing that range in complexity and difficulty. But to this day, buy and hold is a simple, most reliable way of investing, especially if you are just getting started out. And it's the one I would recommend for you as well. Remember this, generational wealth is created by time in the market and not timing the market. Very important. Nobody can really predict what happened to prices, and as I can gather data and am entrenched in day-to-day trading of real estate, still anything can happen, such as 15% foreign buyer tax. If anyone tells you to buy real estate because it's simply a good investment and it always goes up, you should definitely turn around and run the other way as fast as you can. What makes real estate a really great investment vehicle is that you have 100% control of your asset, and it pays you in 3 different ways. You can watch more about that. I'll put a little link to the video up here. The first principle is cash flow, which is what I've been talking about all episode. The rental income covers the expenses. And allow me to elaborate why this is important when evaluating next investment property. Back in Q3 in 2008, when we all knew poop hit the fan of the financial crisis, we all know what happened to the prices of real estate in US. I'll put a chart up over here for you guys to see. What do you think happened to rental vacancies when everyone decided to not pay their mortgages anymore? 3 months after the crash, the start of 2009, when the government bailed out Wall Street, people start to default on their mortgages. And you can see on the graph over here, the impact on the rental market was a turning point for vacancies. It started to plummet to historic lows. This was a time when people no longer paid their mortgages and instead sought out a rental property to put a roof over their heads instead. And you'll note that the lower the vacancy rate, the better it is, because it just means that there's less empty rental properties just sitting around. What do you think happened to rental rates when the vacancy rates dropped, meaning increased demand? Here's a chart. It shows the rental rates during the same time period. Rental rates did not drop like the prices in the buying and selling market. In fact, it stayed fairly consistent. Now, there is a caveat to this. Similar to real estate bootcamp that I was talking about in the beginning, the above info is US driven and not necessarily applicable to us in Toronto. However, it does give us a good indicator on how the market reacts and behaves should Toronto ever experience a crash as significant as the one in US in 2008. What you must understand is this. This is very important. It doesn't matter what happens to the price of your property. As long as you buy a property that pays for itself, even after a crash, your vacancy rates will decrease, rents will increase, and your property will be sold. Over time, and because you have undertaken the buy and hold strategy, your property prices will eventually rebound and you'll be fine. Even if your property is worth $1, as long as your tenant covers all your expenses, you survive the crash because you're not paying anything out of pocket. There will be ups and downs in the real estate prices. I can guarantee you that. But as long as you buy a property that pays for itself, you're well on your way to creating generational wealth. This is why it's the utmost importance to work with an investment-oriented realtor such as myself, and not just your brothers, uncles, nephews, cousins, friend who's a realtor. Not all investment properties are created equal. And frankly, some are just really, really bad. If you want to learn more about how and where to find the best investment properties, our team will guide you in the right direction and help you make the real estate investment goals so that your dreams can come true. Thank you guys for watching. If you learned something in this video, make sure to give me a thumbs up. If you enjoy the content on this channel, subscribe to Prime Properties TV right here. If you have any comments or questions, you can leave them in the comment section below, or you can feel free to contact me. Contacts are right here. Until next time, guys, happy real estating. Real estate investing,